Back to another video. Today we're gonna take a look at gold from a technical, a fundamental, sentiment and order flow perspective. And we're gonna look at what the best probability is for the next opportunity on gold this week. Now before we get started, if you are new to the channel, a sub would be appreciated, as I do provide valuable educational content on a daily basis. If you enjoyed the video, please smash the like button for the YouTube algorithm. And as always, let me know down in the comments below exactly what it is that you would like for me to cover in my next video. So we're going to start with the technical data that we've got for gold over here. So as always, so starting here on the monthly time frame, what do we see? Now we can see our gold has still been stuck within this consolidation phase. The market entered this phase on the 1st of July and we clearly had no breakout. We can also see how the market had printed this massive impulse when the coronavirus struck in 2020, and then we could see the market has just been showing signs of deceleration. However, from a monthly perspective, there was still no breakup to the either upside or downside. But what we can see is the market at last tested the level of resistance, so there's definitely a pullback expected before we could potentially see the market go and hit that level, come down again. Alternatively, the market might break down to the lower side. But because we are retail traders, we always look for short-term opportunities in the market. From a weekly perspective, what do we have? Now, from a weekly perspective, firstly, it's very important that we speak about the structure over here. This level in the market acted as resistance multiple times, once, twice, and then double again. Then twice again there as well. What happened was the market broke above that resistance, support did not hold, market broke below that, came to test that level of resistance twice, and we can see how the market started to melt to the downside. The market also printed this massive head and shoulders pattern, which is considered a bearish pattern from a technical perspective as well. Now, if we drop down on the daily time frame, what do we have? Now, from a daily perspective, we can clearly see how the market had printed this overextended information. And after an overextended information, you expect to pull back to the left leg before the continuation to the downside as well. So going into next week, from a technical perspective, we can clearly see how this level of support got broken and it's being tested as resistance. From a technical standpoint, there's definitely an opportunity for gold to continue lower and test that previous level of support as identified from a monthly perspective as well. Now, if we go look at the order flow data, so the commitment of traders, so this tells us what the big banks, hedge funds and institutions are doing in the market. And we can see a base of last week's report how hedge funds came in and closed minus 37,421 of their buy positions, and they came and added 10,588 selling positions. So we can also see how the overall net positions had decreased from 220,000 to 172,000. Definitely expecting gold to get weaker in the short term. Now, next thing we're going to look at is the sentiment data. Now, the sentiment data tells us exactly what the retail traders are doing in the market. We can see here, based off the last report, how 63% of retail traders are long and 37% of retail traders are short. Now, as I always say, you always want to be on the opposite side of what the retail traders are doing, because their positions are just used for liquidity by the big speculators to move the market. Now, if we go over and look at some fundamental data that we got released last week for the US dollar, because we know that there's a negative correlation between the US dollar and the gold. So when the US dollar increases in strength, gold gets weaker. Now, if we start here with the with the PMI that we received last week Tuesday, we can see how the number was higher than expected. And if you look at PMI data, anything above 50% is higher. We also added higher than the forecast, which was good for the dollar. The jobs, job openings also came through positive, and the ADP, which is probably something I'm never ever going to focus my attention on, but the ADP came through with minus 301,000. Now, this is not the first time that they are wrong. They were wrong in December as well, where they incorrectly predicted the the potential forecast for the NFP as well. So that was one part of the negative. Then we had the services PMI that came out also above 50%, also above the forecast. We had the NFP that came out, the hourly earnings went up, the job the new employment or new job development went up. The expectation was 110,000, but the market came through with 470, 467,000 new jobs. The unemployment rate went up with 0.1%, but it was said that the reason for that 0.1% increase in the US unemployment rate is the 0.3% increase in labor force participation rate, which is considered a positive issue. So we can look at this as a positive for the dollar as well. So the dollar had quite a very good week last week in terms of fundamental data. We can also see how retail traders are on the wrong side of the tracks, and we've got a clear indication here from the biggest speculators in the market that they are not interested in buying gold any longer. Now, from a technical standpoint, the best way to approach the situation is to obviously drop down on a time frame and then wait for the market to provide to you, some sort of indication that it is ready to move to the downside, and then you can take a nice selling opportunity on this market all the way to the downside for the market to go and test that level of support as we identified from this monthly, sorry about that, from this monthly consolidation zone over there. So there's definitely a sell to that level expected going in next week. Now, that's all from my side, guys. Hope you enjoy the video. And as always, cheers for ears.